Pharma stocks fall following US President Donald Trump's comments for tariffs for the pharma sector. He said that pharma tariffs are under review and will come in at levels never seen before.
HDFC Bank is bucking the trend in a weak market on the back of a strong fourth quarter business update. The lender has seen its best quarter-on-quarter deposit growth in 4 quarters and the best loan growth in 5.
Upstream oil companies ONGC and Oil India see a big decline as Brent falls below $70 a barrel on OPEC plus output hikes and uncertainty on demand post Trump's tariffs orders.
Masgao Dog is also under pressure now, down nearly 7% after the government is set to sell up to 4.83% stake through an offer for sale. The floor price was at an 8% discount to yesterday's close. The OFS is currently open for non-retail investors.
Bharat Forge shares down over 8% in early trading after Morgan Stanley downgrades the stock to equal weight from overweight earlier and also cuts its target price by 15% from the previous target price. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangala Malu. With me, Hormas Fatakia. Another day, another rout is what we're seeing in our markets. A 300-point decline on the Nifty, taking it below 23,000, taking it below the 100 and the 50-day moving average as well, or rather the 20-day moving average as well. We'll keep an eye out on how it pans out from current levels. But what's interesting is that we're down. We're not out. If you compare it to all the other indices across Asia and what took place in the US. So we're relative outperformers, but when we're down about 300 points, it's not always relative, it's absolute that matters.
Indeed, and it's kind of a delayed reaction, right? Yesterday, we were fairly resilient to what was happening across the globe, but considering what transpired on Wall Street overnight and considering what's happening in whatever Asian markets are open today, you're taking it a bit on the chin today, particularly for the Nifty and the broader markets itself. But one sector that was an outperformer today, seeing a very, very sharp sell-off now, are the pharma stocks, and they are declining following US President Donald Trump's comments on tariffs for the pharma sector. And he said that the pharma tariffs will be starting to come in soon. This is what he had to say.
The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals as a separate category, and we'll be announcing that sometime in the near future, not too distant future.
All right, near future, not too different future at a level that is not seen before. It'll be a separate category, and that's caused a massive cat among the pigeons when it came to the pharmaceutical stocks itself. Just take a look at a couple of these moves. We have Divi's Labs, which is down 5.5%. Cipla is down about 5%. Dr. Reddy is down 5%. And these are frontline stocks that we're talking about. Look at the broader markets, the cuts are a lot more. Strides Pharma down 9%. Aurobindo Pharma 8% lower. Laurus Labs itself is down almost 8%. Granules, you look at whatever, Zydus Life down anywhere between 7 to 8%. So it's a big decline that we're seeing on this space. And this at a time when, everyone was hoping for the big CRDMO sector in India doing extremely well. So uncertainty is something that we have to contend with right now, especially given the outperformance that we saw yesterday itself. Let's welcome Manas Jaiswal for a quick technical check on the market. Manas, we were hoping that, supports around that 22,900, 23,000 would hold on because of the moving averages, yesterday's low, the recovery that we saw from yesterday's levels as well. Where do you see the market going from here on, especially at the 300-point decline that we're seeing right now? Do you think that this is a better level to buy or maybe wait for better levels?
Good morning, Mangalam. So since Nifty has broken the key support of 23,000, I think the next target would be 61.80% retracement level of its entire rally from 21,900 to 23,900. So I am expecting a target of around 22,700. I think not at current levels, but if you see any recovery near 23,050 or maybe 23,100, then one can create short position. Stop loss should be around 23,250 and target would be 22,700 where the 61.80% retracement level lies.
After a few days, the template has now changed from buy on dips to a sell on rallies for the index. Manas, good morning. Thank you for joining in. What are the specific stocks that you're recommending now in a broader market? In a market like this where everything is in the red, be it pharma, metals, it's only banks like HDFC Bank that are bucking the trend.
So, Hormuz, because the trend is negative, I have two sell recommendations. First is a sell on Aarti Industries where stock has broken the key support key support of 385. Now, the next target would be around 360. So take a short call here. Stop loss should be around 391. And secondly, the sell call on Birlasoft, where because most of the IT stocks are looking weak, Birlasoft has been making lower tops and lower bottoms from the level of around 560. Now, today we have seen a fresh breakdown. So take a short call here. Stop loss should be around 381 and target would be around 350.
All right, Manas, thank you so much for sparing time and joining us today with your views on the index and specific stocks as well. By the way, just before we move ahead, the metal names too are taking it on the chin today. All constituents of the Nifty metal are down in the red, anywhere between 3 to 7%. Vedanta is leading the fall here, 7% lower there. Hindustan Copper down 7 as well. Nalco is down 6%. Hindalco down 6%, as is Tata Steel. So among the top frontline names, as Mangalam was mentioning, for the pharma space, the same is the story for the metal names as well, be it Hindalco, be it Tata Steel, all of them declining anywhere between 6 to 7%. But shifting focus to our special segment where we get you a few ideas for profit from Money Control Pro, Neha Dave of moneycontrol.com now joins us to talk about a stock that she is tracking closely.
Today's stock idea is CMS Infosystems, a market leader in the cash management business. The key question is that why consider a company in the cash management business at a time when the digital payments are hitting through the roof? Despite the exponential growth in the digital payments, the cash in circulation continues to grow, although at a moderate pace. For CMS, cash logistics is the largest segment wherein it caters to the banks and helps them manage cash for ATM and retail services. The top 3 private sector banks and the top 5 public sector banks are the company's clients in this segment. While CMS draws around 61% of its revenue from the cash logistics business, which is a steady business, it has been diversifying into other business lines. Managed services and technology solutions is another segment, and that contributes around 39% of the revenue, and it includes installation, operation and maintenance of brown label ATMs, providing control systems, software for banking automations and remote monitoring solutions that helps in smooth functioning of ATMs. The most encouraging has been a breakthrough into quick commerce platforms for providing remote monitoring solutions at their dark stores and warehouses. Last week, RBI announced a hike in the ATM interchange fees, which will come into effect from 1st May. This will incentivize banks to add and outsource more ATMs, thus benefiting CMS. Moreover, CMS can potentially benefit from the challenges faced by AGS Transact, which is the closest peer in the cash logistics business. In terms of valuation, the stock is currently trading at around 14 times earnings estimated for FY27, which is very attractive for a company that has a healthy balance sheet with no debt, strong management with a proven track record, and robust return ratios with return on equity of around 20%. Long-term investors should consider this stock for the portfolio.
All right, we take that point. With that, we'll slip into a short break. On the other side, get stock specific, a bunch of stocks moving around. We'll get you the reasons why. Couple of these telecom stocks doing extremely well. So we have Indus Towers, which has moved higher. Bharti Airtel has been doing well. Max Financial is the other one, which is higher by about 1% as well, recovered from the lows. But one of the stocks which is underperforming in today's trading session, though of lows, is Avenue Supermarts. And the biggest reason for that is no fireworks that the company reported in its fourth quarter update as well. So just to take you through the update, 16.6% is the growth that the company has reported in its standalone revenue, just shy of that 14,500 crore mark. The total stores at the end of this quarter was 415, implying that they added about 35 stores in the fourth quarter. And implied SSSG over the last 1 year seems like it is close to 3%. Why do I say that? Because between last year to now, the growth in number of stores has been close to around 13%. So 3 to 3.5% is the sort of same store sales growth, which the street is not very happy about. Importantly, what we need to track at a time when there is so much competition is the product mix. What's the kind of margins that they are making, the scale in DMart Ready, and the strategy of the new leader. Remember, come Feb 2026, we have Anshul Asawa, who takes over from Neville Narona. Brokerages have written, Citi has a sell call with a target of 3350 rupees. They said that the average revenue per store actually grew 3.1% in the fourth quarter versus 1 to 7% range that we saw in the previous 4 quarters. So that's telling you about the same store sales growth. They believe that throughput continues to be impacted by adverse product mix, and they see fair amount of risks to SSSG given competitive pressures, store additions itself, and the PE multiple at which the stock has been trading brings a lot of downside risks more than the upside risks. Morgan Stanley too has an underweight rating, a target of 3260 on DMART.
Significant correction from the top as well, right? DMART 2.5% lowers, one of the underperforming names from the highs that the broader markets had made. But the other one that's not doing well today, though, is Mazagon Dock, and that is under pressure after the government has decided to sell some stake in the company through the offer for sale mechanism. Upasana is joining in to tell us more on that. Upasana.
Well, as rightly pointed out by you, the government has announced an OFS of 4,900 crore. The government will sell up to 5% stake in the company via OFS, and mind you that the government is currently holding nearly about 85% stake in the company. Looking at the finer details, the OFS includes a base size of 2.8% and green shoe option of additional 2%. Now, OFS will open for non-retail investors on April 4th and for retail on April 7th. And as mentioned earlier, the floor price of the offer is at 2,525, which is at a discount of 8% from yesterday's closing price. But stock has corrected since the start and is down about 6.5% in today's trading session, nearing the floor price level. Now, let us look at the near-term triggers for the company. The company is technically one of the only companies qualified for the supply of P-75-1 submarines, and this order opportunity can be as high as 50,000 crores is what the street is eyeing. Additionally, company also has pending orders worth 25,000 crore, and if we look at the company's current order book, it stands around 3.5 lakh crore. And with this additional orders, it could scale up to as high as 3 times the current order book is what Antique has also estimated. So all in all eyes on this stock today.
Indeed, 6.5% lower is Mazagon Dock. The floor price is 25.25. So there's some bit of correction that the stock has also seen from the highs. There is Mazagon Dock. But the other one reacting to the back of its business updates is Angel One, and Vamakshi is joining in with more on that. A 5% lower on Angel One, Vamakshi.
Well, yes, Hormaz, the stock is tanking in trade today on the back of a mixed update from the company. But of course, the negatives are outweighing the positives for this counter. Keep in mind, gross client additions stood at 4.7 lakh. This is a downtick of almost 4% on a month-on-month basis. And this is bad because the pace at which the gross client addition was happening has been slowing down over the last 3 months. Client base is steady at 3.1 crores. This is an uptick of 1.4% month-on-month. On the flip side, when we look at the average daily orders, they stood at 53.7 lakh. This is an uptick of 8%. Average daily turnover too saw very strong uptick, 23% up month-on-month at 36.38 lakh. This is in fact the highest level that we've seen since the month of November last year. On the flip side, when we look at the market share, that has taken a bit of a hit. Equity market share is down nearly 60 basis points. So is the F&O market share, down 60 basis points to 21.5%. And this is a decline that we're seeing in the F&O market share for the second consecutive month. The commodity market, on the other hand, has recovered after taking a sharp knock in the month of Feb. Commodity market share now stands at 57.9%, an uptick of almost 260 basis points month-on-month. So therefore, it's a mixed update, but the negatives outweigh the positives.
All right, Vamakshi, thanks a lot for that. But the stock that is actually outperforming today, doing well and stemming the losses that we're seeing on the frontline index, in fact, leading the Nifty bank to outperform today is HDFC Bank. It's up around 1.5% off highs, but still holding up. Abhishek joins in with the fourth quarter business update and what it looked like for HDFC Bank. Abhishek.
Well, it's one of the best quarters that they have had in last 4 to 5 quarters with respect to the business growth rate that you are seeing on a sequential basis. Take a look at the deposit growth, nearly 5.9% over there on a sequential basis. This is one of the best that you are seeing in last 4 quarters. Now, the advances growth is at 4% quarter on quarter, which is one of the best that you are seeing in last 5 quarters. On the other hand, the CASA or the low-cost deposit momentum has been better than the deposit growth, and this is after many quarters that you are seeing over here. So 8.2% CASA growth on a sequential basis has helped the CASA ratio improve on a sequential basis as well. So CASA ratio has increased to 34.8% versus 34% in the previous quarter. So advances growth on a YY basis is at 5.5%, but on a sequential basis is at 4%. The AUM growth over here is 7.7% YY and about 3.3% on a sequential basis. Calculation shows that the CD ratio or the credit deposit deposit ratio has declined both YOY and quarter-on-quarter, in line with what the management has been guiding, that they intend to lower the CD ratio from the current high levels, and that's been taking place. Back to you.
All right, Abhishek, thanks a lot for that. So that's about HDFC Bank. And in fact, all the stocks that we discussed right now, if you want some insightful analysis on that, if you missed this on the television and you want all of them on your hands, here's the CNBC-TV18 app. You get instant access to breaking news, in-depth articles, all the financial world updates at your fingertips, at your convenience, at your own sweet time as well. You can download it from the CNBC-TV18 app. You can download it either from the Apple Store or the Google Play Store, or just scan that QR code, which gives you access to the app itself.
Welcome back. Now, even as the index is 270 points lower, negotiation talks between the US and India are continuing. The government sources have said that while India remains concerned about tariffs, government sources suggested that there is no need for undue worry. Abhimanyu is here with all of those details. Abhimanyu.
Now, post-imposition of reciprocal tariffs by the United States, government sources have told CNBC-TV18 that while India is not happy with the tariffs, but no formal objection has also been made to the move. They also indicated that India already has an early mover advantage, as it has already engaged in negotiations with the US for over 50 days for a bilateral trade agreement. Also, India is the only country where the US had sent a negotiation team for talks in the Trump 2.0 administration. Sources also cited several challenges in exports of shrimp, gems and jewelry, and also competition in the export of carpets compared to countries like Turkey. Opportunities have also been cited in several sectors like electronics due to tariffs on Vietnam and China, and for export of textiles due to the tariffs which have been announced for Bangladesh and Vietnam. Also, government sources added that reciprocal tariffs which have been imposed are based on trade deficits the US has with respective countries, and country-specific tariffs are largely aimed at generating revenue as well as creating negotiating leverage for trade ties and trade deals with several countries. Sectoral tariffs have been placed higher as per sources to benefit domestic industry in the United States, though the cost of production will increase in the United States, which is already not too competitive in terms of manufacturing in some sectors. It remains to be seen how the situation is going to pan out with respect to the impact of reciprocal tariffs on India as well as other countries.
All right. In fact, let's listen into Mark Zandi of Moody's, what he had to say about the reciprocal tariffs and what all our experts are making of this as well.
Well, if the reciprocal tariffs are implemented in full, I would expect some retaliation from countries abroad. I don't think they're going to sit on their hands. So the combination of those two things will result in a recession, an economic recession. It's a tax on American consumers. The bulk of the tariff increases will fall on them. Businesses that import product will have to pay more, which will hurt their profitability and thus their investment in hiring. If I'm right about the economy and the impacts, I do think the president will ultimately react to that and hopefully will pull back and declare victory and move on. And if so, we can avoid an outright recession. But time is running out. He's going to need to pivot here pretty quickly. Otherwise, I think the U.S. economy is going to go into recession and take the entire global economy with it. I don't think any country in the world is going to get through this without some significant hit to economic growth. Some countries are going to navigate through better than others. India's got a lot of it's a resilient economy. It's got a lot going for it, and I think should be able to weather the storm reasonably well.
And we also spoke to Neelkant Mishra of Axis Capital and Samir Arora of Helios on this move and their reactions to this. Listen.
The $700 billion odd of extra revenue that on an annualized level the US will start now to collect is about 0.6% of global GDP. So this is effectively fiscal tightening for the world. The gist is that this is a straight first shot 0.6% of GDP, global GDP. The postponement of production would be another 1%. I think we are talking about a significant rise in uncertainty for financial markets. I said more than 1%. I said 1% because of investment getting delayed. That's a broad ballpark back of the envelope thing. And in addition to the 0.6% of volatility that
the first thing in a big picture sense, although, you know, in our long only fund, we are fully invested and all that. But I would think this behavior of the market is a bit suspicious and not to be trusted because, you know, Indian market has made this simple thumb rule, not that they will analyze the stock, but whether that day there is net selling or not by FIIs. See, the thing is from an economy point of view, it's not a big deal because we don't have big scale of imports and exports. You have to see if the US market goes down in a dignified manner, goes down 8-10%, we can all handle it and we will outperform it and maybe not be up in that period, but at least it will be dignified and you will get FI flows. But if the US market is down, you know, much more than that, then we cannot say we are isolated. That is what my lesson experience is from 2008. If these other markets go down a lot, then you can't make money. You may lose less. You may do this. Of course, in 2008, even though we had no connection with the US subprime crisis, India was down double of US.
Take that point entirely coming in from Samir Arora. When things go down, the only thing that goes up is the correlation between them and not necessarily isolation. The Nifty, though, has ameliorated some of its losses from the time we started the show, but that's not saying much because when we started the show, it was down 300 points. Now it's down 278. With that, Hormaz may take your leave on this edition of Chartbusters. The team of Trading Hour comes up next.